Hey, excited to walk through the deck. Starting off, just wanted to share how I think about what I'm trying to do with a pitch deck. You want to pique their interest and get on a call. That means really giving them enough information to make a snap judgment about whether this is a good opportunity and giving them the information that the typical investor will get dozens or often 100 or more pitch decks every day. You have less than 30 seconds to make an impression. A high-level checklist is communicating really concisely who the customer is, what the problem is, what your solution is, that it's going to be a really big market size, so you need to be able to generate billions in revenue. If you're looking for venture investors, you need to have moats, so the ability to maintain really good margins in the long term, deal with existing or potential competitors effectively, traction, and a strong team that's a good fit, and then details around the raise. You really need to hit all of those things very concisely to be able to get a meeting. So now I'm just going to walk through looking at this deck and kind of share what I see as a potential investor. So just the top, optimize your inventory effortlessly. This feels more like a value prop to a customer than to an investor. I don't know if optimizing inventory is a big deal. I'm not convinced at this point that this is a problem. And so I want to know, is this delivering ROI? It could be increased sales by Y, decreased working capital requirements by X, but making it a little bit more tangible in transferable financial terms so investors understand who's the customers that they're talking about. Because I guarantee Walmart is not losing 28% of their sales or stocking 33% extra inventory. Are they independent retailers? Are they e-commerce versus brick and mortar? There's a lot of variation about who this is. When I see these numbers without any qualification and without any sources, it really undermines credibility and makes me feel like, do these guys really know what they're doing at this stage? How much cash flow can you increase? How much can you increase sales? I think there's a missed opportunity to show what are the unit economics and what does this mean in terms of bottom line profitability as well as the emotional resonance for a user and a customer. You're missing out in some powerful communication about the value prop here. It's good to have products shot, or if you don't have a real product, mocks to show like, okay, we have a vision of what this thing looks like, how much can you reduce inventory, and how does that translate for businesses of $500,000 in revenue, $1 million, $5 million, whatever the type of business. Again, there's no data here. I don't know what scale of companies you're talking about here. By not being more specific, either about what part of the market you're serving or what part of the market you're prioritizing first, the investor is going to go to whatever market within retail they're most familiar with. And they're going to probably over-rely on their experience and intuition. You want to prime them to think about the actual market and the market that you have expertise in and that you're planning on, because otherwise you're sacrificing control, and they're probably going to make comparisons that are not correct, but have a falsely high sense of confidence. Team, it looks like you have experience in the industry. That's great. One note is, I think it's fine to put it here. I do think in general, if you have a strong team fit, if you are talking through the deck with people, and usually even when you just put the deck down, I prefer putting the team slide first. When you're pitching somebody, I always start, what's the story of you? Use your personal experience to explain the problem and show that you've encountered the problem before and humanize it. And you're simultaneously illustrating your expertise and why you're the right person for this business. You're also using that as an opportunity to talk about a problem that people are really desperate to solve that you understand well, and can do both things simultaneously and ensure that no matter what, everybody understands exactly the problem and how you're going to solve it and why you're the right team. Okay, two really big things. One is I would expect to end with a raise slide. So we are raising X amount to accomplish Y. We're raising $1 million on a $7 million post-money safe, and then a little gray. It's like we're 80% there, seeking our last 200K. This will let us build the product, acquire our first X customers, reach Y and ARR by Z date, so we can raise the next round. Generally, there's no traction. If you have the results, you want to put it as high as you can in the deck. If you have really strong traction, which I would say in terms of the key things for a business like this would be unit economics, which are going to be driven by how much does it cost to acquire customers, to acquire an active customer, and then what is your churn? Because it's recurring revenue, your lifetime value is going to be driven primarily by your churn rate. And so the unit economics, and then if you're really early, it might be things like how big is your pipeline? What's the cost per active lead? How many build partners do you have? What's the contracted revenue if you don't have actual recurring revenue? Generally, the longer you go without seeing traction, the less impressive it's going to be. I would want to see how are you going to acquire customers? What are the channels? How are you thinking about acquisition costs? What results have you made to date specifically on acquiring customers? Another thing that's definitely missing is moats. And when I say moats, two things, like how are you going to, in the longest term, what this is about is how are you going to defend good margins over time? What are you doing today? Is the market big enough, and does it lend itself to building moats? And so that could be economies of scale, it could be network effects, it could be distribution challenges. I should say, like, a lot of what I said sounds super critical. I'm a founder. I want people to build successful companies. I want you guys to succeed. And so I was trying to channel, this is like a fairly jaded, skeptical perspective of someone who sees hundreds of these decks, because for an investor, a VC, you're like a politician. There's no upside in getting people. There's not a lot of upside in being straightforward and sharing your feedback with people. And so I guarantee that many of these things are going on in people's heads when they look at a deck.